Hi guys, hope you guys are doing good. We're back with another video, and today I'm going to be showing you a strategy, or rather approach, that you can use to trade continuations. Right, so the first thing that we want to understand, if you open up any chart, is your higher time frame structures. Right, structure is very important, and you also need to understand where price is coming from. Right, so going to your higher time frame will give you a very good idea of what's happening. Right, remember your higher time frames will determine your shorter time frame directions. Now, where many people go wrong is they just want to jump into the shorter time frame and look for trades. Right, so in this case, looking at GU, we can see that price is currently trading away from a supply zone or a base area. Right, now this is in your weekly time frame. So by analyzing the weekly, you can already tell what you need to be looking for. You need to be looking for shorts positions, right? So short opportunities, right? So going down to the daily, after understanding where price is coming from, we are now able to make our trading decisions. Remember, your daily time frame, depending on the type of trader that you are, but your daily time frame will basically give you, all right, a very good idea of the direction of price and the direction of the days, right? Because if you're coming from supply, then if we are in a down phase, we need to start looking for short opportunities. Right, we need to start looking for short opportunities. So going down to the 4 hour, the first thing that you want to ask yourself is, where is price coming from? Right, where is price coming from? That's the most important thing. Now in this case, we can look at GU and we can see that we had a nice base area recently here, right? And this is where price is actually trading away from, right? As you can see, this is the recent price action where price got into that area. So number one, we want to understand where price is coming from. Now in this case, we can see that price is coming from supply, a nice decision area, right? Price gave us very good approach to that area, right? We can see that approach back to that area, right? So now the next thing we want to ask yourself is the structure, right? So going back to the 1 hour, right, over to the 1 hour, we can see that this is what happened, right? We can see that, okay, we've got price coming from our supply, right? Here's our supply level. Price pushes down, right? And as price pushes down, price breaks structure. We can see that this is a clean structure breaker that we have right here. Right, clean structure breaker that we have. Number two, we want to see the zone strength. So in this case, this would be the area where we would be interested in, right? This is a nice base area right there. We can also see how price left that area, right? It tells us a lot about that area. But in this case, price does not reach that area. Price actually creates base. So how do we identify a base? Right, we look at how price leaves the area, right? That's the most important thing, right? Because how price leaves the area will determine the zone strength, right? Will determine the zone strength. So in this case, we can see this is what we had right here. Now let's go down to our shorter time frames. We can try M30. Right, you see a nice area we've got. Look at how price left the area. It says a lot about this region, right? And a decision point right here would be this one, right? So look at how price leaves the area. What does price do when price leaves the area? Price breaks structure, right? So this base area is responsible for breaking this structure here. So that leaves us right here with a lower low. Right, that leaves us with the lower low, right? That's very important because we need to see how price will then approach our area, our base area, right? So as you can see, price reaches the base area. After price reaches the base area, of course, you need some candle confirmations, right? So my entry would be right here. Right, this is where my entry would be. Remember, this is your M30 time frame. So if you are taking your trade from the M30, then that would mean that you need to focus on the M30 for targets, or you can even go to your higher time frame. But trust me, a time frame like the M30 would be good. So this would be an area that I'd be interested in for targets, and this would be my second area, because these are all base areas that I would be interested in for targets, right? So what do we see? We have identified the base area, right? We already know where price is coming from. Price is coming from supply, right? But we need to wait for the dealer to show us his hand, right? So base area created, we've got approach back to the area, and we have a confirmation. So in this case, this is a very good trade that we have right here. It means your stop will have to go above, and your first take profit would be that zone right there. And trust me, the risk to reward on that is already cool, right? If you had this second zone as a take profit tool, that would be very good, right? So this is a very clean approach that we have right here. So it means if we had an entry here and a stop just above, we'd be risking, I mean, this is pound USD, we'd be risking 21 pips, right? And your first target that you had down here would be 76 pips. Your second target, that would be 100 pips. So already the risk to reward on that is amazing, right? The risk to reward on that is amazing, right? So that's the first trade that I would have identified within this market structure. Now, just by looking at the same market structure, we already know that price is coming from a base area, right? And price has reacted to that base area, which has determined that zone strength, right? The strength that we have on that zone. So what does price do? Price drops, gives us a base and another drop. Now, can we see that this base area has a very good strength, right? We can see how price has left the area. That's a very important thing. Price has left the area, right, with very good price action, right? And as price drops, right, price breaks structure. So we've got structure confirmed, right? Now after the structure, we need to wait for how price will approach the area, right? How price, this is now our M15 time frame. So price gets to the area, and my entry with our confirmation will be right there, right? Confirmed, right? So it means if you're going to be looking for a trade right here, you're looking for a short position, that would be your entry, and your stops would be above the structure. Your first take profit would be down here, right? Your first take profit would be down here. Right now, this is an M15 trade, right? You can also minimize your risk, because remember, your risk is very important, right? Before you enter any trade, you need to understand how much you are risking, right? Before you think of the money you're going to make, understanding your risk is very important, because if you do not manage your risk well, then you will not lost in the game. So it means right here you'll be risking 14 pips, a clean trade, and your first take profit would be 47 pips, which is okay. Very good risk to reward on a trade, right? This is what you need to focus on. Now let us look at other pairs. We've got USD CAD. Starting with your higher time frame, what are you going to understand? You want to understand direction, right? Now in this case, just looking at the higher time frame, we can see that price is already moving away from supply, right? And our recent price action was this one, right? We've got this area, a nice area there. If we can zoom in, right, we can see that it's a nice area and very good reaction, right? Price moved away from the area and then went back, and then we continued going down. So going to the daily time frame, going to the daily time frame, this is what we had, right? We had price break structure. As you can see, after price had broken structure, right, price then went back to a very good decision point, right? A very good decision point, and then you can see we had very clean moves away. Right now, remember, you need to keep it simple. Right? If you do not see it clearly, then do not attempt trading it. But the same thing that we have right here, same scenario, right? We have determined where price is coming from, right? And as we have determined where price is coming from, we can see price has moved away. What does price do? Price moves away from the supply zone and breaks structure, right? Now remember, as price breaks structure, you need to understand where the hidden pending orders are placed. This is institutional trading, order flow, right? And as you can see, price makes its way back and moves down, right? And then price creates another zone. Remember, we need the dealer to show us his hand, right? So when price creates another zone that we have, remember, we already know the direction, right? What does price do? Price moves down and breaks structure, right? That's all we need. We need to see structure being broken, and then we need to see price come back to the same area, right? We need to see price come back to our base area, right? So if we're going to take a trade, remember, this is your H4, but this can be applied in any time frame. So price is back in the area, price has given us confirmation. My entry would be right there, right? My entry would be right there, and my first target, right, would be this one. Sorry about that. This would be my first target right here, right? Not a bad target. and my second target would be this area right here. And as you can see, this trade played out very well because we followed the rules, right? What do we have? We know where price is coming from. This base area is responsible for breaking the structure. We've got very good approach back to the area, right? Remember, these orders need to be collected. After that, very good very good risk to reward. It means right here you'd be risking. So if your entry would be somewhere here, so it means we have to move this above the area. It means, of course, this is your H4, so the risk is a bit, I wouldn't advise that you trade you risk 43 pips. But if you had decided to risk 43 pips, if you decide to do that, then it means you still have to maintain the same level of risk, same percentage of risk. So that would be 2% of your account, 4%, whatever amount that you have according to your trading plan. And that would have hit a nice profit target of 188, which is very good risk to reward, right? Very good risk to reward. So you need to make sure that you look for these opportunities and you follow the same rules. So same thing we have. Let's check what we have on pound yen, right? Go into the weekly time frame. What we can understand is I can already tell that price is reacting to a nice base area in the weekly, very strong, right? And this was our area, and you can see how price has reacted to that, right? You can see how price has reacted to that. So going to the daily time frame, right, what did we have? We can see we've been bearish for more than 3 days now. So the H4, we're looking for the same thing, right? We want to see the hand, as long as if we know what's happening in your higher time frame, right? So what do we have? Price is coming from your supply, fine, right? We can see the supply, right? And then we look for the dealer to show us the hand, right? And the dealer will show us the hand. As you can see, nice area there, drop, base drop. And from that area, this would be the area we're watching, because we can see zone strength, how price